So Bitcoin just had a big move down, and you got to ask yourself, is this the dip where you need to buy or not? So we have a couple of different scenarios. This is a WXY, a double zigzag down, meaning that it's corrective. And if it's corrective, then we are heading for higher prices after this is done. So here we are counting this as an ABC to W, ABC flat into an X, and now a finishing ABC into a Y. So the issue here is that we have a pretty clean here 1, 2, 3, 4, 5 that we can count, an A and then a B. But after that, we need a C, an impulse. So if this is to be an impulse, this needs to be like a 1, 2, 3, 4, 5, and so on. So way lower prices. So if we are looking at this scenario, this is really not the time to buy, I would say. And this is no financial advice. I'm just talking about how I would approach it. Other than that, we have a double zigzag, basically the same way, but this is going even lower. So this is counting this part as a B, and then a C to a W, and then we have an A, B, like an A, B, C to an expanded flat, and we're looking now for an impulse up to wave X. And after wave X, we need to take a look at if wave X hits this target or level, basically. This really lowers the probability for this whole scenario to be a deep double zigzag. So if we hit this, the chances are way higher that this is a sideways correction. And if this is a sideways correction, then wave Y can't be a zigzag. Then wave Y needs to be a flat or a triangle. And there's a way higher probability that wave Y is a flat in that case. So that is basically it for the correction. So it's a W and then ABCX, and then we have like an A that could take out the low, but then a B, because an expanded flat is more common than a regular flat, and then a big wave C. So we basically range around this area if this is the scenario. And also we have this scenario. This isn't really likely, but this has the same movement as the one that is looking for wave X. So here we're looking for ABC, a finished impulse here in wave C to complete wave X. And here we're also looking for wave C to finish the impulse. We just count this a little bit different. So it doesn't really matter if you count it like this or if you count it like this. The results are the same. But basically we're looking for higher prices here before we're moving down. So all of these scenarios I just mentioned are corrective structures, means that this is a higher chance for these to sooner or later take out the all-time high, because this doesn't look impulsive at all. We have an impulsive scenario, which is a bearish, which is looking for way lower prices. So this is a 1, 2, 1, 2, 3, 4, 5 to a 1, and then another 2. So it's 1, 2, 1, 2, and then we have another 1, 2, 1, 2, and so on and so on. The issue for this scenario, why it has low probability, is because it's unusual to have this amount of 1, 2s after each other and not have like a go. So if you have like a 1, 2, 1, 2, then it's more common that you have a very big strong wave 3, or that the volume is increasing at least. But this is basically the same amount of volume in this movement all the time. So nothing is really changing. So the invalidation for this scenario is here. So this is the second 1, 2. And if we take out this then the bears doesn't really have any options left. Because if you count it like this, 1, 2, and then 1, 2, 1, 2, the first 1, 2 here, you can see the time for this, it becomes extremely long here for this to be wave 2. So if you move up here and take out this, this becomes the 86, and then this needs to go over here, and that becomes, and that is like over here. So then we are dealing with the time issue for like, I don't know, 5,000 a few time, which is unheard of for a wave 2. So basically, that is the end of the bearish options. So if we take this level, it's extremely high probability that we will sooner or later take out the all-time high. And to understand the time issue here, you might ask yourself like, all right, but if you go down here in W, ABC up to an X, and then move down to a Y, so when are we finished? So you gotta see it from a bigger picture. So this is the weekly time frame. All of the others were 4 hours, 6 hour. So this is the weekly time frame. And here you can see that we are currently in the big wave 3, and we are finishing or starting, however you want to call it, wave 4. And a very common target for this wave 4, which we are in right now, it's never an absolute truth when I say we are in it, but it's very high probability that we are. So a very common target for this wave 4 is a wave 4 of a lower degree, and that is between these two lines. So this is the 4 of a lower degree. So here, somewhere here, is a very, very high probability target for this wave 4. And you see that we haven't really even moved into this area yet. So it is very, very probable that this isn't done, and that if we get a ABC and like a wave X, and then we move on to Y, to a bit lower levels, that is very high probability as well, because of the proportions, basically. Because if you see here, wave 4 of this lower degree is this. I mean, it's if you take so it's 31%, and this isn't even 13. So yeah, it's a higher chance that we will go into this area a bit more, and also the time aspect. So here you can see that we don't want to reach 5 or 6. 6 is an absolute max. We don't really want to reach 5, but 4 and a half, that is okay. So if we're not done yet by October, after 16th, something like that, then we should consider other options. But it's fine to go 5 and no more than 6. So yeah, let's just keep at it and check the charts before we make a decision here. But as you can see, this is a higher chance of being corrective. So that is the good news, basically, that we are going up and taking out the all-time high before we are entering what everyone is calling bear market, which is basically this area. But it is not really bear market. It's a wave, a correction wave of some sort, and then we go again. But this bear market, quote unquote, can last maybe 2-3 years. So yeah, you could call it a bear market, but you know what I mean. So yeah, check for this invalidation for a double zigzag, and also check for this invalidation to not go very, very much lower. If we take out this, then it's very high probability to take out the all-time high pretty soon. So yeah, that was it. Thank you for listening in, and have a good one.